Ashok Lavasa, the Secretary of Finance, Government of India, joins us on the sidelines of the ICICI Securities US conference right now. Mr. Lavasa, great speaking with you. Thank you so much for having taken time out and speaking with us today on ET Now. You're in the US right now. What's the key message to the big US investors from the government side?
Well, I see a lot of excitement here among the investors, and everybody is watching India, looking at all the developments which are taking place, the reform path which the government has undertaken. So there is a lot of expectations on India. People are watching how this digitalization is taking place of the economy. People are watching the rollout of the new tax regime. So on the whole, I find a lot of interest in the developments that are taking place in India, and people are looking for opportunities that these developments will provide.
Now, finance reforms in India, the latest Reserve Bank of India ordinance to tackle NPAs, how are foreigners looking at some of the steps which you've taken? What kind of queries are you getting?
The non-performing assets and the difficulties which the banks have had with this impaired portfolio, it has been a matter of concern to all those who are observing India. And Government of India and the Reserve Bank has taken a number of steps in how to deal with these issues. But this latest amendment which government has brought about, empowering the Reserve Bank of India, is being seen as something which will make the entire mechanism a little more effective, and it will encourage the banks to get into settlement mode, to find viable resolutions to many of these projects. And on the whole, I find that this has been seen as a positive development, and people are hopeful that this will lead to early resolution and effective resolution of some of the NPAs. So it is a fact that this has been a matter of concern, and it is equally a fact that people have seen the recent developments as a resolve on the part of the government to deal with this difficult situation.
Right. So, what are the trends regarding tax receipts, etc., that you're seeing post demonetization? Is there more compliance? Because we saw IT returns filing numbers surge post, the GST announcements, and post GST, once it does get implemented, how will the revenue receipts actually fare according to you? What's your guesstimate?
In fact, if you see the figures which have come for 2016-17, you find that overall there has been a substantial jump in tax receipts, almost 18% increase in tax receipts. Further, if you go down to the central excise duty collection, there is a over 30% increase in excise duty collection year on year. The personal income tax has gone up by about 21%. The service tax has gone up by about 20%. So you find that tax compliance has gone up, and tax receipts have shown a remarkable improvement. I think here on it is likely to improve further, and this buoyancy in tax receipts has enabled the government to spend more money on development activities. In 2016-17, if you look at the spending on the plan side, we have spent almost 99,000 crores more in 16-17 on the plan side compared to the previous year. So an expenditure of about 5,70,000 crores on the plan side has provided a big boost to activities, development activities, as well as economic activities throughout the country. And one other thing which related to this that I would like to inform your audience about is this early presentation of the budget which was done on the 1st of February, and which enabled the government to get the budget passed before 31st March. That has also shown that the expenditure in April from the government side has shown a substantial increase compared to the first month of last year. So the objective of government in completing the approval process before the new financial year began is showing its results.
Now let's talk about FY18 growth. You see a 7.5% number post the full benefit of GST by FY19, right?
Well, I think straight away from 17-18, we should see the results of GST. Although this being the first year, there would be some teething issues of compliance, issues of people understanding the procedure. So I think while the benefits will start flowing from year one, but its full realization perhaps should happen from next year onwards.
Right. Finally, Mr. Lavasa, what are the divestment plans and targets going forward? How is the government progressing in the same quarter?
See, divestment has been a consistent policy with the present government. Last year, we were able to do almost 46,000 crores worth of divestment. This is perhaps the highest ever done in the history of India. So I see that this process is going to further gather momentum. This year there is an ambitious target of almost 72,000 crores from this side. The listing process has already been approved by the government. So more companies, you'll see whether they are insurance or other central public sector undertakings getting listed. There is a report of the Niti Aayog which has recommended strategic sales. So that is also under active consideration of the Department of Public Asset Management. So on the whole, opportunities in various sectors will arise for the private sector in the companies that are listed for disinvestment. So I think this is another area which the investors are looking at, and they are feeling quite excited about.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.